Now we have the measurement, focus, and basis of accounting, which also happens to be the title here. Why is this important? What is this? Is it important? Yes. And that's why I have this memorize tag here. Please memorize it. And here we have 4 levels. What we saw before were the 3 main types of funds. So think of these as the same level. These are all individual, different types of governmental funds. And it will get tricky, I promise you, because I'm going to refer to this section, everything here, as governmental fund accounting. However, we have the governmental funds, which is an actual class of funds. Proprietary and fiduciary funds are also technically governmental funds. You see what I mean there? It's confusing because they're funds in the governmental concept. However, the actual term governmental fund refers to the 5 set of funds you saw before. Government-wide, on the other hand, is essentially, imagine you are a large company and you have many operating segments. And these are all your operating segments, all these funds here under these umbrellas. And once you consolidate your financials to the big package, the final consolidated report, it all goes to the government-wide, and there's a lot more rules there. For example, you don't include fiduciary funds. We'll get to that section later on. But just to give you a super high-level overview, I want to just talk to you from my heart, right? So this is me explaining what a lot of people struggle with in this section. Let's touch on measurement focus first. So measurement focus, why is that important? What is it? So first off, there will just be straight questions asking, which of these funds follows the current financial resources measurement focus? And then it'll give you one of these funds, the sub-funds, I would call them. And it's obviously a governmental fund we saw, so maybe they say debt service fund. So you'll need to have like a good memorization-based understanding to say, okay, debt service falls under governmental fund. Governmental fund is current financial resources. That's the answer. Just wanted to introduce that as a first level to this material because there's a lot of just plug and chug, super easy questions to just gain points on. Now, obviously, I'm going to explain what the heck this is because we want to know what this is. All right, so economic resources measurement focus, what is that? I'm going to simplify it. It's just normal accounting. It means you use current assets, current liabilities, long-term assets, long-term liabilities. Current financial resources focus, you only use current. So only current assets, current liabilities. And again, at a super high level, how do you account for them if long-term liabilities and assets exist? You don't. You transfer them to these other funds. So governmental funds at the end of the year close out, zero out. Every account balance there is 0 at the end of the year. So you would transfer all of the long-term assets and liabilities to other funds, wherever they may be. There will be a bunch of examples there. We'll practice questions and journal entries later on. So that's what that means. It's the only different one. Economic resources is what corporate and not-for-profit use. So it's normal. Okay, next we have our basis of accounting. Now you might notice accrual accounting. Where have we seen that before? Literally everywhere, right? We've seen that all throughout the test. That's the basis of accounting for corporate accounting and not-for-profit accounting. What does accrual accounting mean? And please, I beg of you, please know what this means by now. You should know. It means revenue is recognized when earned. You've probably heard that a million times. So MA, modified accrual, stands for measurable and available. Doesn't stand for that, but it's a super great way to remember what it means, what happens in it. MA. Okay. So within that MA, measurable and available. Governments, how do they make their money? They make their money through property tax revenue. And you might tell me, oh, but they make money in other ways. Well, we are taking the AICPA's test, and the AICPA primarily says the way governments make their money is property tax revenue. Remember, we're learning for the test, not for real life. And just like corporate, maybe Netflix sells subscriptions or Tesla sells cars. We make money through property tax revenue. We can recognize that property tax revenue in governmental funds when it is measurable. How is property tax revenue measurable? Well, if we know we're going to bring in $1 million of property tax revenue in 2022, let's say, then cool, it's measurable. We have an amount. We have an actual amount that is determinable. Maybe it's this estimate, maybe it's a little off, but you essentially can determine roughly how much money you're going to bring in as a government. Next, this one's a little different, available. So if I earn revenue as Disney in December of the year, well, it's going to be recognized in that year, right? And if I earn revenue in that next year, it's recognized in that next year. However, governments are a little different. And why is that? Well, in my colloquial terminology and from speaking from the heart, it's because they make the rules. Governments make the rules. They get to do whatever they want. And they, just like any business, want to make their financials look good. Disney would love to take revenue from the next year and say it's this year, make their financials look better in the current period, but they can't because they don't make the rules. The governments do make the rules. So by available, we mean within 60 days. I'm going to elaborate on this more. Let's say we are in December of 2021. If you're a government and you can determinably measure the amount of revenue you'll make in the next couple months, and if you're going to receive that in the next 60 days, so maybe we're going to make that revenue in January and February, we can recognize that in the current period. It sounds crazy, right? This is the only time you'll ever see this, although it's quite pervasive. You see it a lot here throughout the test in government. And it is a crazy rule. Why can you recognize the revenue before you've collected it in the next 60 days? Well, again, because the government makes the rules. And also, if you don't pay your property taxes, they'll send the police after you, whoever the enforcement agency is. So that is the difference in revenue recognition for governmental funds. And again, specifically for property tax revenue, that's where we're going to see this over and over and over and over and over.